Shut up and sit down.
This is a Mortgage Accelerated podcast, where mortgage professionals who are crushing it tell their stories and share tips to succeed. Now your host, Tyler Carlston.
Hey, what is going on, everybody? This is Tyler Carlston with the Mortgage Accelerated podcast, and today we have Evan Wade. Welcome, Evan.
Thanks, Tyler. Thanks for having me.
Not a problem, brother. How you been?
Great. Just every day hustling.
Yeah, this is what you got to do. That's what you got to do. So what's been going on with you, man?
I guess the better question is what's not going on with me. I started a second mortgage brokerage earlier this year. Trying to hopefully, scale it as big as possible. Just trying to find great self-generating loan officers out there who want to, hopefully make more money, have better rates, and get out of the captivity of the retail channel.
Yeah, I mean, we're gonna dive into that in a little bit later. So to start off, Evan, why don't you just tell me a little bit more about yourself? Tell me your story. Where'd you come from, brother?
So the bulk of my experience in the mortgage industry is in banking right now. Catching up though. Started out as a part-time seasonal teller. Worked my way up to an assistant manager, working for a bank in my area in South Jersey, and decided it was too stressful for too little money, and I decided to quit on a whim. Had no job lined up. Thought I was going to leave the mortgage industry or the financial services industry altogether. Then I was missing it after working in corporate compliance for a little bit, and got my license, my state license, and became a full-time loan officer May of 2015. So I'm just now coming up on 4 years now as full-time in the mortgage industry. Worked at a couple different correspondent and retail lenders for up until February 2018, and then I decided to start my mortgage brokerage with my partner Paul Carlston, Philadelphia Mortgage Brokers, in February last year, like I said, and it exceeded all of our expectations. A few months after that, I started to find out about the Arrive project through the AIM, Association of Independent Mortgage Experts. And I got the t-shirt on today. But I heard out what this project was going to do, and kind of a light bulb sort of went off. And I decided I needed to start a mortgage brokerage that I think can scale with the technology, leveraging technology that loan officers can come in and basically plug into the broker channel. It's a lot less complicated than starting your own business. I also believe that most loan officers don't want to start their own business. So I'm trying to bridge that gap between, being in the broker channel without having, to deal with all the compliance, business management, all that stuff that takes away from real money-making activities.
Yeah, makes 100% sense. So what made you get into the mortgage business? I know you were a teller at the bank, but what made you make that jump over to mortgage banking?
I think so. I learned the mortgage business while I was working in the bank at the bank, and I loved it from day one. I'm 100% self-taught in the mortgage industry. We had they call them a regional consumer lender. I actually taught her the mortgage business. She was really good at consumer loans, but she had never done mortgages before because they opened up. I think in 2009. Yeah, 2009 is when we were able to start doing mortgages in the branch. So I just kind of took the bull by the horns, read the guidelines cover to cover, and that has really kind of served me well in my career altogether. I'm known as the guideline guru, especially with VA loans, just because I don't really have any secret sauce. I just read the guidelines from cover to cover, and I guess I have a pretty good memory too. So I guess it probably goes back originally, as a kid. My parents are also small business owners. They just sold their business earlier this year. And both my grandparents on both sides of my family were small business owners as well after my grandfather retired from the Air Force. So small business ownership was the entrepreneurship was always, I think it's in my blood personally. I was going to the bank with my mom, almost every day. She's making deposits and all that. So banking has always kind of fascinated me from, a really young age. So I think that's really what kind of set me on the path that I'm on today.
Yeah, that makes complete sense. So what do you think the biggest obstacle for you was that when you got into the mortgage business and just started lending in general, not so much opening your brokerage, but what do you think the biggest obstacle was for you when you first got started?
For me, like learning, I think the challenge that a lot of people in the industry have is actually like learning it. I never really felt that pressure to learn the business because I learned it in a low pressure environment working for the bank. It wasn't 100% commission back then. So, you could kind of learn it in a low pressure environment, but I did learn the business during the first refi boom after the crash, in 2009, I guess it would have been 2011. I probably did most of the refinances back then. So I did kind of learn trial by fire too. But I think the biggest challenge for me, I'm more of an introvert, so I wasn't that guy that was going to go out knocking on doors, dialing 100 realtors on every Monday. I would be miserable if I did that. So I think Facebook was really my saving grace. And that's really how I've been able to build all of my influence, essentially. Like if I was going to happy hours and conferences and stuff like that, people would have no idea who I am. Yeah. But social media has been like a comfortable way for me to really be able to, expand my influence and spread my knowledge around in more of a natural way. So, I would credit my success mostly to Facebook because I probably would have never succeeded in the mortgage industry without it.
Yeah, I mean, Facebook is one hell of a tool. I mean, you literally have the world at your fingertips, and there's endless possibilities with the platform. So I want to get into a topic with you. So what made you switch from retail over to the more the broker side? What made you make that jump?
Well, other than, personal reasons, like I said, the entrepreneurship being in my blood, all my paths led to owning a business at some point. I actually owned my own website hosting business when I was a teenager too. I don't really consider that as like, true business, but, while I was in high school, that was my first business, other than the lemonade snack stand at the end of my parents' driveway when I was like 8 years old. It was going to happen whether it was the mortgage industry or starting a tech company or anything like that. I was going to own my own business one day. But specifically why I went to start my own mortgage brokerage is I learned that, when I was in the retail channel and the particular lender I worked for, we had it shoved down our throats that the service you got there and the support you got there was worth the higher rates and the lower comp that you got. And once I learned that the broker channel has, for a good loan officer, they know their guidelines, they know where to go. Like there's no greater flexibility than the broker channel. And obviously the rates, specifically for VA loans are way, way, way better in the broker channel than the retail model. Just for instance, my market alone, when I worked for the retail lender I was charging almost 6 points at par pricing on a VA loan, and it just got to be a point that's not where I priced. I took significant pricing reductions on every single VA loan I did, but I knew I was still 3/8 to 0.5% higher than the market in rate, and I just find that to be really unconscionable when you can deliver the same product with the same or better service at a significantly cheaper price. And I always say that, and all else equal, an informed consumer is going to go with a lower price. So, there's no lack of execution, lack of service, lack of control in the broker channel. So once I learned that, it was really just, it wasn't even, it made the decision very easy to make, especially after I ran our financial projections for both of my partner Paul's production. We could do less business and still make more money. So, that's kind of how I did my financial projections. And I'm like, well, now the numbers work too, just if we maintained. I think I actually ran them if we lost a little bit of volume. anticipating having a little bit of a, stunted growth. But yeah, I mean, and here we are a little over a year later, and I have 7 loan officers working for me at Philadelphia Mortgage Brokers and 4 or 5 at Epoch right now. So, I have over 10 guys working for me, and hoping to grow that, to a few hundred.
Yeah, I mean, it sounds like you're just going onward and upward, and just the sky's the limit for you. So, going back to the VA rates versus retail versus, I want you to touch on that and dive into that a little bit more, if you don't mind. 'Cause I know that's a really big thing in the industry right now. So if you don't mind, I want you to give me your opinion on that.
Yes, so I not all retail lenders are like this, but the large majority of them, due to government loans being backed by the government, they inherently have lower rates because it's considered a safer investment. So in exchange for that, lenders feel like they can get away with charging a lot more. So they're literally subsidizing their P&Ls on the backs of veterans and lower credit borrowers with FHA. So, more specific to VA, because that's just one demographic of person. Like the veterans, they went out and they signed on the dotted line to give up their life for their country. So, and we're over here charging them, 2, 3, 4 points more than a conventional borrower would be, paying in rate. So, these companies are literally keeping themselves afloat by charging basically price gouging veterans is the way I look at it.
Yeah, I mean, I'm sure the vetted VA movement that Chris Griffith is heading right now.
I'm one of the founding members.
Yes, sir. Same here. And so, I mean, I feel veterans need to become a protected class to where it's same as the FHA buyers, that they have the same eligibility, the same type of rates, and that we need to make a switch in the industry over to that. And I think that's going to be happening very soon. There's lots of big players, in my opinion, that are making that push, and I think we all finally have the ammo that we need to get the end result that we're wanting.
So I think the really truly smart loan officers are realizing that they need to start thinking about how they're going to serve the consumer more so than how they're going to serve themselves. So a lot of loan officers are sticking out in the retail channel because they think they have this perceived notion that they get more support, and that that they have this quote unquote culture that makes them do more business. And culture is important, obviously. I'm looking to build that here as well. But there's no amount of Kool-Aid that's worth ripping people off. And I think more and more loan officers are realizing that, and the more that come to this channel and do that, the more you're going to squeeze out. That's the way I think that you really solve the problem, is squeezing out all these lenders, and just so that's between informing consumers that the broker channel is a better place for a veteran to get a loan. Number 2, you're promoting to the loan officers that the broker channel is better, so they come to the broker channel, the margins and prices go down. So just because we literally can't charge more than what we do, than 275 bits, or because our compensation is regulated. So I think it's a two-faceted approach to solve that problem. And I don't believe in I know you talk about the protected class and all that. I'm more of a self-regulation kind of person. So, I'm not afraid to call people out. I've done it with a few lenders on LinkedIn, Facebook, and 20, 30,000 people see it. And I think more and more people doing that and calling out the bad practices, the problem will wind up solving itself, versus bringing in more laws, more regulation, and stuff like that. I remember there was an executive at one of the large lenders, probably one of the ones that are going to get sanctioned by Ginnie Mae, by the way. It was saying, "Oh, we need more. You guys need to focus your energy into going to Ginnie Mae and getting them to change policies." No, we just need to self-police ourselves, and tell each other that what you're doing is wrong. And I think the problem will get solved that way, more so than relying on the government or regulatory authorities to take action. Because as we see, every time they introduce some new law or policy or something like that, these lenders just find some other way to do a loophole. So you can look at the data on VA loans. You have, IRRRLs were like, interest rate reduction refinance loans were sky high up until 2017. Last year, they, put the seasoning requirements in, recoup requirements, all of that to make sure we weren't ripping them off on IRRRLs. So what do lenders do? They just flip it over to cash out refis. And now 2018 was like the number one year for cash out refis, which in my opinion are more dangerous than IRRRLs, because now you're encouraging veterans to use their house as an ATM, which is a very dangerous game to play, especially if we encounter some sort of market correction over the next couple of years. So between charging insanely high rates and encouraging veterans to, do cash out up to 100% of the value to, repair their water heater or something like that. I remember Chris Griffith saying, it's just not, it's not worth it, because it's going to cost you $5-6 grand plus the funding fee and closing costs usually. And then, just to get a few $1,000s out. No, that's, I'm in this business to be an advisor. Like, I talk people out of refinances a lot. Refinances are great for the right person or the right, rates drop enough. But if your rate's not dropping a point or something like that, I usually just tell them, come on, just make extra principal payments or something like that. And I, maybe that's not like the smartest business decision to make, but I believe being honest with the consumer and not just trying to make a sale winds up resulting in more referrals. They trust you more, and you can build a better business that way. Is really the kind of the way I operate and try to mentor others to operate.
Yeah, I mean, make a valid point there. So, Evan, what's next for you? Like, what is your goal? Because you're a very big VA advocate, veteran advocate. What changes do you want to see made in the next 12 months? Like, what's your personal goal to get done?
Personal goal is I want to be the largest mortgage brokerage in the country. I haven't really publicized that. I don't know if you can see behind here, but my goals are, next year I want to do $1 billion in volume. 2021 I want to do $2 billion in volume. And I want to have over 500 loan officers. I want to have a large company, and with my VA knowledge, I hope that I can recruit a lot of VA minded loan officers to hopefully we can build a really nice brand specific to veterans. My biggest producer in Colorado Springs, Brian, he does like $75 million a year in volume himself. And 50% of that is VA, because the Air Force Academy is there, and he just crushes it. And that's part of the reason why we connected, is because we're just masterminds at VA loans with the guidelines and all that. So he's the exact kind of person that I'm trying to go out there and get, because we can. I think when you have all that talent and collaboration out there, you can really reach consumers more and show them that we're the better option and just keep growing and growing.
Yeah. I mean, that's 100% true, man. Hey, well, it looks like that is all the time we have to chit chat today, Evan. So I appreciate you coming on, man. Great talking with you. Hopefully I got your story out there and your message and your goals, and I'm excited to see you continue to crush it.
Thanks, man. Thanks for having me on. I really appreciate it.
All right, everybody, thank you for tuning in, and I will catch you next week on the next episode of the Mortgage Accelerated Podcast. Talk later.